Welcome back to Bitcoin Season 2 from Blockspace Media. I am your host, Charlie Spears, co founder of Blockspace. Make sure to check out other Blockspace content, the Gwart Show, the Mining Pod, the Bitcoin Stock Show. Hit our newsletter at blockspace.media. That's the website. Bitcoin Season 2 is about new conversations and new faces on the oldest blockchain, which is Bitcoin. We will have the first conversations about a lot of the new things which I think are going to drive this particular cycle and the next several years of Bitcoin. So today I've got Luke Xie, co-founder of SatLayer, a Bitcoin restaking platform on Babylon chain, which launched last week during the Babylon launch. SatLayer just announced a 8 million pre-seed raised by Hack VC and Castle Island. We're going to chat how SatLayer works, talk about Bitcoin restaking, and just kind of explain that top down to you guys. So welcome, Luke. Welcome to Bitcoin Season 2.
Thank you so much for having me.
I see you're a fellow OCM holder from your profile picture on Twitter. How's that going?
Absolutely. Rise. No, it's been going great. It was actually how I really got cued into this kind of Bitcoin Renaissance Bitcoin season two. So I actually co-founded this crypto community of MIT alums called Beaverblock. And so back in April of last year, we actually had Danny from Unchained Monkey come and talk to us about this, whole kind of ordinals thing, right? This inscriptions thing that was really just starting to take off back then. And it really kind of led me down the rabbit hole of Bitcoin season two. And then now I'm here building SatLayer.
In a way, it's like all roads lead back to Danny. Like he founded, I think, like San Francisco Bitcoin meetup or BitDevs or something. He was
Yeah.
like first to ordinals. Like, yeah. So shout out Danny, shout out the OCM community. Yeah, can you just keep going on your background for me? Because I was looking, it looks like SatLayer came out of the MIT Harvard Blockchain Accelerator program. But like, what are the past few years led, for you been like to lead you to launching and co-founding SatLayer?
Yeah, I'll actually go back even further. I mean, so, for myself, I first discovered Bitcoin, at least in terms of the white paper, actually in '09 when it first came out. So I was still back at MIT back then in my undergrad days. And so, uh, 1 year prior in '08, it was quite fascinating, I think, to have like a firsthand view of the great financial crisis and kind of interned on Wall Street summer of '09, kind of the aftermath of it. Read the Bitcoin white paper, and I think, to be fair, when I first read it back then, definitely thought it was a bit out there.
Many
It's
such
kind of like
cases,
magic,
yeah.
yeah, magic internet money, right? And it was really more kind of in 2011 when that Wired article came out, right? They did like a big cover story on Bitcoin, on like Satoshi Nakamoto, that I think it started piquing my interest. And then kind of fast forward a few years later when Jeremy Rubin, Daniel Litzer, and Christian Catalina did the Bitcoin airdrop to undergrads on campus. That really started the conversation going among us alumni. So unfortunately, none of us actually got any Bitcoin that airdrop because it was only to current undergrads. But we all started talking about it, and I actually ended up buying some Bitcoin along with some of my close friends as the forcing function for kind of for ourselves to learn, and we immediately got the full crypto experience because that was 2 weeks before Mt. Gox blew up. So
Welcome to Bitcoin, jump in the deep end. Yeah.
exactly, exactly. And so, we kind of in those 2 weeks, it was like, the price of Bitcoin doubled and then completely cratered. Luckily for myself, I actually ended up buying it on this scrappy startup called Coinbase back then. So I didn't lose any in Gox, but it was actually a very tough decision at the time, right? Because Gox was like the big incumbent player. They've been around for, quite a few years. Whereas Coinbase is just like these, scrappy guys, in SF kind of building this thing. And having already worked at startups at that point, I knew how much of a, mess I'm sure it was internally, right? So I was like, which path do I go with? And chatted with like a good friend of mine, Kevin Gao, who's who's also quite early to the space and certainly an OG. And ultimately decided to go, support Coinbase, which in hindsight was actually, definitely the right decision. Um, so that really like, got me interested. But even back then, I took a look at the space and the use cases were still super early, right? The main one was really kind of Silk Road and more like, black market use cases. But, kind of saw that there was some, first of all, Bitcoin was still around from, since kind of first reading that Wired article. And then continued to follow the space. And it was in 2016 when I was helping Walmart revamp their technology strategy, that I was looking at all this deep tech for them, like AML, drones, mesh networks. That was when I discovered Ethereum, and thought the concept like smart contracts and the world computer made a lot of sense. And it ended up going full time in the space 1 year after, during kind of the crazy ICO era. Um, and so kind of like, quick personal journey from there. Basically in 2018, founded a crypto fund with my co-founder there, Stephen Chen. And then in 2022, joined forces with Spencer Yang, and launched Press Start Capital together. So with Press Start, we invest super early stage. So we were first round investors in Monad. And then we also wrote the first check for a project now called A Priori. Back then it was called Bbox. And we built this pre-accelerator program that really bridges the gap in the space that we saw between hackathons and top accelerators like Lion Style and Andreessen Crypto Startup School, and Binance Labs Incubation. And so from there, more recently, as part of like the Beaver Block group, we decided to launch the MIT Harvard Blockchain Accelerator. Kind of taken a lot of learnings and inspiration from our friends at Stanford with the Stanford Blockchain Accelerator. And so SatLayer is part of the inaugural cohort there, and I'm also one of the core contributors for the Myth Accelerator, as we call it.
And you guys just raised $8 million, which is pretty big for, like, I would say Bitcoin companies, especially even this far into, we're at 60K Bitcoin, but like we haven't seen big Bitcoin raises. This is a number that's more reminiscent of like the Web3, the crypto ecosystem.
Yeah, I think we were certainly fortunate there. I think just given I think the backgrounds of me and my co-founders, and then for us all having been in the space since really 2017, 2018. And I think just the excitement around what we were doing. And I think, to be frank too, like I think we certainly lucked out a bit on the timing, right? So I think we basically did the bulk of the conversations around kind of late April, beginning of May, and was already kind of oversubscribed within a month. So definitely lucked out a bit there in terms of timing.
Okay, so let's pull back a bit. Before we talk about exactly what SatLayer does, I want to, at a high level, for the audience who is probably coming in brand new, like a lot of them are hardcore Bitcoiners, haven't really been paying attention to other ecosystems, especially not staking ecosystems. Um, what is restaking and what is the purpose of restaking at a high level?
Yeah, it's a great question. So I think this whole concept of restaking came to be from kind of the EVM side of things with Eigenlayer, right? And so I think kind of Freeram and his team, I think they've done a great job of, one, really helping people understand what it is, and two, kind of like really driving the acceptance of this concept and of the entire narrative. So what restaking really is to basically use assets that are already staked, to actually use them to secure other projects, right? Specifically, kind of like other chains. Um, and so, kind of how it works is, so normally in proof of stake chains, the original design is that your own token, right, is used as kind of collateral, like stake. When you when your own token is staked, it's used to basically secure your own proof of stake blockchain. So that's how it's historically worked. But I think one thing that so people are coming to realize in the space is that, especially as there's more and more chains, right, and in particular in bear markets, when let's say like the value of a token falls 90%, right, suddenly the pure proof of stake model is not necessarily that secure for your chain, right? So the example is, okay, let's say your market cap FTV falls from, let's say, 100 million to 10 million, right? 90% drop. So suddenly now, for a proof of stake system, now generally it's a 33% attack that they're vulnerable to, right? So it takes 3 million change, 3.3 million, someone owning that much of your tokens to be able to kind of take over the network effectively, or seriously attack it. So because of restaking, saying, okay, well, given that proof of stake has this kind of vulnerability by design, why don't we instead of using your own token for security, why don't you use a much bigger crypto asset as your security model, right? So in Eigenlayer's case, it's staked Ethereum, and in our case, it's Bitcoin that's staked via Babylon. And so I think for us, in many ways, how we kind of arrived at this is just going back to first principles, saying, okay, if you believe the restaking model makes sense, right, which we certainly do, then why not use the biggest, oldest, and most secure asset in the space, Bitcoin, as the collateral.
And you're leveraging Babylon protocol, Babylon chain, as the way. You've already got supposedly all this Bitcoin staked. You can plug right into that, use that as into various restaking services. Um, but this time it's Bitcoin, which is interesting because it's a proof of work asset versus the other assets, which are proof of stake generated. As far as I'm aware, I'm not familiar with other proof of work restaking type uh, projects, unless I've missed any. Um, are there fundamental or structural differences, you think, in how the asset is generated, or the consensus mechanism that is proof of work? Do you think that changes or adds additional security elements to just the entire restaking ecosystem, perhaps over a proof of stake asset like Ethereum? What are your thoughts on this idea?
Yeah. So I think the way we think about it is that I think in many ways Bitcoin is actually the best asset for restaking, right? Specifically because it is proof of work, right? And so so if you just look at it from attack and vulnerability perspective, right? Proof of stake is like 33% attacks that it's vulnerable to. Proof of work is 51%. Plus, it's not as simple as, oh, you just need to accumulate a bunch of tokens. To attack Bitcoin, you actually need to control 51% of the hash rate, which means you have to control like 51% of physical hardware, in terms of miners, and so that's actually harder to accumulate, right? Versus just like a token. Um, so I think that's something that's very interesting to us, and I think yeah, you're absolutely right, right? Like, there's not, I think, that many. There's not really any other projects that we're aware of that uses the model that we are building on top of Babylon, right? And then so, like, definitely largely in thanks to the innovation that Babylon has in terms of building this kind of trustless staking solution that we are then able to build on top of that foundation, to really allow people to restake and use Bitcoin for shared security.
So now we're finally getting to SatLayer and how it works, which is, it's pretty analogous, it sounds, to other restaking services, but it's just Bitcoin plugged into Babylon. It's going to look really familiar to anyone who currently participates in Eigenlayer restaking. Um, is it really that simple at a high level?
So I think it, it's kind of like, I guess in some ways maybe an oversimplification. So it's kind of like yes, it's kind of like the meme where it's like low IQ versus high IQ,
Yeah.
right? So the low IQ answer is yes.
Yeah.
Effectively, we're building Eigenlayer on Bitcoin using Bitcoin as your collateral, right? The more nuanced answer, I think, is Babylon themselves have a singular slashing mechanism called EOTS, right? That can secure other POS chains. against equivocations, right? So kind of double spend and forking attacks. But what Babylon does not natively support are all the custom slashing conditions, right? The kind of full programmable slashing that as for someone building on top of EigenLayer, like they have the luxury of kind of being able to use. And so that's where we come in, is really to extend the functionality of kind of slashing capabilities and slashing support on Babylon to be fully programmable, right? So it's kind of like anything anyone can think of, they can build that slashing condition, on SatLayer, or kind of use one of the existing ones that we've already built. And so this, like, just to expand on this a little bit further, like what does it actually mean, right? So this means that you can actually build a lot of different, I think, protocols and dApps on top of SatLayer and by extension Babylon. So examples be like a lending protocol, right? A DA solution, or even a sequencer.
Gotcha. And then this is where the concept of a BVS comes in, I believe. Um, and again, for the audience who's not familiar with AVSs, are actively validated services, can you explain what that is and then how we arrive at the nomenclature Bitcoin validated service?
Absolutely. Yeah. So AVSs are what people build on top of EigenLayer. So they're called actively validated services. And this is getting into the weeds a bit, but because the way it works is with EigenLayer, you have these effectively node operators, right? EigenLayer just calls them operators. That actually the operators will actually choose which of these AVSs on top of EigenLayer they will actually secure, right? And each of these operators have a certain amount of collateral / TVL pledged to them, right? So it's kind of like, in many ways, it's like, for anyone familiar with Ethereum staking, right? Unless you're running like a node, node yourself, you're actually staking through, like, let's say like a Lido or like a Rocket Pool, right? So in some ways it's similar, where on EigenLayer you can kind of choose to basically stake your wrapped Ethereum, or like stake ETH with one of these operators, right? And then the operators will choose a certain set of these AVSs that they secure. This becomes quite relevant once slashing goes live, because effectively you are exposed to the slashing risk from these AVSs, right? And then these AVSs are, could be applications, right? They could be other protocols. So that's kind of like the way to think about it and on the EigenLayer side of things. And then for SatLayer, it is quite similar, right? And I think that the big exception is, again, it's secured underneath by Bitcoin, staked through Babylon, and so hence that's why we decided to call them Bitcoin validated services.
Gotcha. And so Babylon launched last week. It was kind of like one of the big news stories because they allowed, I mean, it was only 1,000 Bitcoin, first to be the first 1,000 Bitcoin through the gate to be staked on Babylon, increments of 0.05. It created a huge like fee rate spike, generated a lot of discourse, took a lot of people by surprise. Not me, because I knew this was coming. Like, I talked to David Say, and um, I want to maybe talk about the disconnect between certain parts of Bitcoin in a second. But um, simultaneously, you guys were not on my radar really until the launch week. Simultaneously, you guys opened up 100 BTC of restaking for your first epoch. Um, which and I believe that was pretty much immediately uh filled right out the gate, as like as I was kind of looking at it. That's about 10% of the capital on Babylon currently, which is now restaked through SatLayer. um I what does the next few weeks look like? That's 10%. If you consider like the total addressable market of like idle capital on Bitcoin, this is a very, very, very big um, market that you could be tapping into here. Like, what does that look like? What's the bull case for Babylon and just restaking in general?
Yeah, absolutely. So I think the bull case is that uh, I think Babylon and SatLayer will actually secure the majority of crypto. And so I think this is certainly quite a bullish case, right? But I think if you think about it, it starts making sense, right? One, just going back to my point earlier, like again, biggest, oldest, most secure, asset within crypto. Secondly, I think if you talk to a lot of the founders in the space, right, especially people that have been around for a few cycles, everyone's kind of like a closet Bitcoin maxi, because it's kind of like it's like the saying, all roads kind of lead back to Bitcoin at some point. And I think at minimum, I think for most people that have been in crypto for a while or quite crypto native, they kind of see Bitcoin as the base currency, right? And so they may trade in and out of other cryptos, right, for like investment purposes, right, or like for like even meme coins, for example. But they're not gonna like long term hold kind of many of these alts or meme coins, because they know that at the end of the day, like a lot of this value kind of overall like rotates or accrues back to Bitcoin. Um, and I think in many ways, if you think about it from like a Bitcoiner's perspective, it's also quite interesting, right? Because with like after a couple additional halvings, there becomes a real problem in terms of the ability to secure the network with the reduced fees, right? And so then there's really kind of two directions to go, right? One is you change the entire model, right? You kind of increase the fees, but then that you're in some many ways you're changing Bitcoin, or the other is to have like meaningful usage on Bitcoin and of Bitcoin. And so I think that's something that we're really, I think, pushing is to have basically all of crypto, right, use Bitcoin for security, which I think in many ways it was made to be used for. And I think thereby actually increasing security for the entire space as well.
That's a very big and bold idea that Bitcoin may be used to they have finger in the wind, calling your shots. Like Bitcoin could be the asset used to secure all crypto. I'm gonna throw this question back at you. Can you flesh this out again? Like, why not Ethereum or other like popular proof of stake assets? Why Bitcoin over these other assets as the like pristine asset to secure other chains?
Yeah. Um, I think a few reasons, right? One is just Bitcoin is just so much bigger than all these other assets, right? And then again, from earlier, like proof of work just is much more secure as a as like a mechanism than proof of stake. Um, and then I think I think to be clear, this is kind of like the in some ways like the extreme bull case. I mean, I do see at least in the interim like kind of like a multi-collateral world, just as I think we are very much in like a multi-chain world now within crypto, right? Where there's for certain use cases, Bitcoin collateral will be better, and then or even certain ecosystems, and then for others, Ethereum-based collateral will be better. But I think for us, we are a little bit biased, but I think it's also if you think about at the end of the day, if you're using this asset for security, right? And so what provides the best security in space? Bitcoin.
So this going back to what I uh hinted at earlier where it to me I walk in both worlds. I pay attention to the broader crypto landscape and like the particular new Bitcoin season 2 beats. Um but like my Bitcoin friends and my Bitcoin only chats were pretty blown away by the Babylon launch because it shot fees up to the I think the second highest they've been this year and the second highest they've been in years.
Yeah,
Um, Overnight, it was only a few blocks, but that represents significant demand for this type of product. I think if you'd asked like anybody in the Bitcoin ecosystem 2 years ago, at least the people I had been following, everyone would say, no, this is not, nobody wants to do this. Nobody wants to stake, nobody wants to leverage, especially because it was like hot off the FTX bottom. We had the great
for sure.
almost reset of like anti yield and everything, but it's like we're back now, it's back on the menu in different forms, perhaps with added security benefits. Um, but the main takeaway is that I get is that I observe that the market really, really, really wants this type of product.
Yeah.
Um, this goes against a lot of the prevailing Western Bitcoin narrative of hodl, don't do anything fancy. But the market seems to invalidate. Is maybe the current narrative of what Bitcoin is to be used for, is that changing? Has that always been there? Is this mainly a Western kind of isolated, siloed ecosystem? What are your thoughts on this topic?
Yeah, lots of thoughts. So let's see where to start. Um, so I think, yeah, I mean, I think, it's interesting you kind of went back to like 2 years ago, because I think Babylon's actually was actually building back then, right? But I think at that time they really had to like slog it through to raise funding at that point. It's just given where the market was, right? Like what had happened with like FTX and like 3AC and like all these things. But I think the landscape has really changed over the last year or so, with I think in large part thanks to all the work of like Danny Domo and Casey and everybody else with ordinals inscriptions, right? I think it's really kind of driven this Cambrian explosion of innovation on Bitcoin that just hasn't happened for many years before, right? I think to your point, right? Like 2 years before, and probably for like the 3 or 4 years before that, right? I think there was very much the view among the Bitcoin community, like Bitcoin should not change, it should just stay like it is, it should be digital gold and store of value like nothing else, right? And I think what has happened, especially over the past year, is that there's been this kind of renewed interest and excitement, enthusiasm about building on Bitcoin, building the Bitcoin ecosystem out in terms of like all these infrastructure that has kind of grown and developed and iterated over on the like Ethereum side, over on the alt layer one side, and a lot of these teams came from these ecosystems, right? And I think the benefit there is they took the learnings of like the past really 8 years of experimentation and iteration, so that in like building in the Bitcoin ecosystem, it's not like we're starting from scratch and making the same mistakes all over again. It's like, oh no, we're actually taking the latest and greatest thinking, and avoiding a lot of the mistakes that were made, to actually build things much better in the Bitcoin ecosystem. And I think the other thing to add is there's certainly I've noticed there's certainly been a geographical difference and almost like a geographical arbitrage opportunity, where a lot of the excitement for even like ordinals, inscription runes, right, and certainly for kind of Bitcoin season two, started out in Asia, to the extent it became, so a lot of these things became red hot in Asia before, like I think even like like notable investors in the West like took note, like we're even aware of it, right? I mean, for our own raise, like we noticed that when we were pitching more of the Asian investors, everyone already had a good sense of what Babylon was doing. But when we were pitching Western investors, including like like top tier funds, a lot of folks weren't really clear what Babylon was doing. We had to almost spend like the first half of a lot of these conversations explaining like what is Babylon doing, what is Babylon not doing, and so that's like what are we doing? And it was quite a stark difference, I think.
This is interesting, and that was actually the my next question, because I made my first trip to Asia. I went to Hong Kong for Bitcoin Asia this past spring, and I'll be making my second trip to Asia here next month for Token 2049 in Singapore. I certainly recognize this trend. So yeah, clearly, if you've been in ordinals, you know that Asia drives the ordinals market, which by association then means that Asian market participants are the ones who are the most impactful on Bitcoin's block space dynamics and block space pricing, which is a common theme for us. I try to analyze this and take a look. Do you think this trend will continue? Do you see maybe the Westerners waking up to this reality? Do you think Asia will continue to lead in this category? Um, yeah, do you have any thoughts at all on this topic?
Yeah, tons of thoughts here as well. I think. So I think if you had asked me 3 or 4 weeks ago, I would actually give you a very different answer than now, right? Because what had happened over the last 3 to 4 weeks is like, the fact that, Justin Sun through Bit Global has acquired like almost in some ways like a controlling stake in WBTC, right? Like that news broke, and then not long after, Coinbase, kind of made their move in the BTC ecosystem after a long time with CBBTC, right? So I think kind of the on the wrap BTC layer, where before that it was really WBTC, and then with the launch of FBTC, which is really kind of backed by Mantle, Cobol, and Antelfa, which is kind of Bitmain's venture arm. That was kind of like there was already so originally it was kind of just those two, and there was kind of like the Western, kind of wrap WBTC that was custody at BitGo, and then FBTC, which is kind of a bit more of an Asia-centric wrap BTC solution. But now kind of Coinbase is into the chat, right? And then WBTC is now much more Asian than they were a few weeks ago. So I think the entire landscape has changed, and then I think in some ways you're kind of seeing a bit of the USDC versus USDT dynamics now at play, and I think going forward it's also quite interesting because of the launch of the Bitcoin ETFs over the past year, right? Where I think in some ways maybe the balance between East and West is more imbalanced now than I think before the launches of the ETFs.
So what does this mean? What does this mean for the Bitcoin staking, Bitcoin restaking landscape? Like, how does this drive your decision making? It certainly probably drives marketing and communication, but like, does this, yeah, what strategic impact might this have?
Yeah, I mean, I think to be frank, I think everyone's kind of still digesting what this all means and like how the landscape has changed, right? I think the benefit for us is I think we are one of the few projects in the Bitcoin ecosystem that can deeply engage both East and West. I'm a first generation immigrant. I was, born in China. I went to States when I was 8. Mike, my co-founder, he was similar. He went to States when he was 10. Arun, our third co-founder, was born in the U.S. And so just between that and just the amazing investors that we have that are supporting us, including Franklin Templeton, one of the ETF issuers, it puts us in a great position to really work deeply with both sides, right? With a lot of the kind of the OGs and like the miners in Asia, as well as like the institutional players in the West.
Yeah, it's really interesting. I myself have noticed that to me, some of the the people best positioned are those who are very familiar with Asian culture and can speak to both East and West. This is clearly like one of the unique skill strengths that founders have. Um, so I wanna throw a bit of a pressing challenge question to you, a
Sure.
bit obligatory, where there's a lot of criticism on the landscape of restaking. Um, I would not say it's pervasive, but like Eigenlayer is people are on there's a couple camps here, and one of those camps is quite critical of it and critical of perceived leverage or like types of like locking up this asset into this restaking. They're critical of the messaging that that it secures these meaningfully. I'm familiar with kind of the high level arguments on both sides. Um,
Mhm.
what are your thoughts on this? And then maybe does does Bitcoin introducing Bitcoin actually change some of the arguments here?
Hmm. Um, So yeah, I've definitely heard the arguments as well, right? Some kind of actually uh what's the word I'm looking for? Sorry, it's a little bit late over here.
I get
So
that.
I'm not yeah, I'm some of these words I cannot no longer find. Um but yeah, I mean like like some people refer to like, it's like no different than '08 with like subprime and like rehypothecation, right? But I think part of it is I think with a lot of these new use cases, it takes time for people to wrap their head around and digest it. And like even for myself, like at one point I thought it was like, yeah, it's just like you're just rehypothecating things and just introducing leverage, right? But when you really dig into it, and it's like, if you really ask yourself the hard questions of, in bear markets, like how much do these market caps fall for these POS chains, right? Like, how secure are they? And I think the other thing to note is, you know, there's more chains than ever, right? And then if you believe in the app chain thesis, there will be like 10x, 100x even more chains, right? Like, like nowadays there's new layer ones launching, there's the explosion of layer twos, right? And then there's these like app chains layer threes, right? So if you kind of play that out to at least the medium term, what this means is there's kind of hundreds, if not thousand plus active blockchains, right? That if they're using like proof of stake models, unless like in very short order, the market cap of the entire space, like 10 or 100 x's, that means on average, each chain will have actually lower TVL to secure their own chain using proof of stake than they can today, right? And especially if you add a bear market into the mix, then it means a lot of these chains are probably vulnerable to attack. And so that's why I think for us, the way we think about it is, I think restaking is actually the solution here. Until kind of like a more elegant solution is thought of.
Yeah, it's interesting because it seems like we've had this like the multi-chain thesis for a while, but it seems that certain chains which have one or arguably one certain categories, Bitcoin as like the pristine monetary asset, the market will converge. It seems to be converging on some of those on the use case of that, but for the multi-chain thesis in a way. Um, it's I don't really have a fully formed thought here, but I think this is something I'm going to be watching pretty closely. Um, just because this is one of the more interesting, it appears to be one of the more interesting eras for Bitcoin as an asset after 4 or 5 years of it not being very interesting at all to me. Um,
Yeah.
yeah, were you say something?
Yeah, absolutely. I think I mean I think in some ways I think right now you're kind of seeing the release of pent up demand, I think, for Bitcoin to be more than just a kind of, store of value, or some would argue like an idle asset, right? I think, if you look at just the size of WBTC and how much it grew from, first being launched, like there's always been demand to use Bitcoin in DeFi, right? And I think it's also now, in 2024, right? DeFi has had quite a few revs and has been, and like a lot of the kind of key models and kind of the blue chips have been battle tested enough, right? That like they've weathered so many black swans that you can see that think the designs are actually quite resilient and quite sound. And so I think in some ways now is actually a great time to bring a lot of these kind of more mature models into Bitcoin, right? To make Bitcoin more productive. And it's also, I think, in some ways with the ETFs, right? For better or for worse, I think it has brought in a whole new class of users and market participants that are actually more familiar with yield. I think it's that coupled with, I think, the community in the East that generally has kind of been a bit more pragmatic with things versus I think folks in the West maybe being a bit more kind of idealistic, right? That I think, and sometimes I think in crypto generally you need the mix of both, right? Because as we've seen time and time again, if you just have good tech without a great community, right, without a good go-to-market strategy, just having good tech is not enough. On the flip side, just having good go-to-market and like no tech behind it, also like sooner or later will come crashing down. So like the way we kind of think about it is really if you kind of bring the best of both sides together, is how I think as a team, as a project, you thrive, and I think as a space, that's how we move forward.
Maybe that's the way to view this in the East and West narrative, where the East is very pragmatic, ready to deploy capital, ready to move, and the West is a little more cautious about technical design. And then combining these two, I'm kind of spitballing here. Maybe
Mhm.
combining these two is one of the best hybrid business and protocol models.
Yeah.
Interesting food for thought here.
Yeah,
So
absolutely. Because it, yeah, and just to add like one last piece of that, because yeah, this is really from like kind of the 6 years I've spent as like a kind of VC in crypto is like I mean even there's folks that have asked me like a year or two ago, it's like, what's your dream like founding team in crypto, right? And my answer has always been it's kind of go to market folks from the east and then technical folks from the west. I think that is kind of the dream team. And I think I think in some ways like that's the team that we're building here at Sally.
that's like I feel like that's the tagline for me. That's a really compelling narrative. Okay, so SatLayer launched by the time this episode airs, I think tomorrow, Thursday, SatLayer will be halfway through the first restaking epoch, if I'm correct. It lasts 2
That's
weeks.
right.
Um, what comes after that? I assume a second epoch. What might
Yeah.
that look like? Are you ready to talk about that yet? How's that going?
Yeah, absolutely. So I can't share too much details yet, but yeah, so our epochs are run every 2 weeks. And the idea behind these is that they actually map well to like our internal engineering sprints, and then it's also a good way for us to really kind of test different mechanisms, different designs, right before we kind of fully lock things in for kind of main launch. And I think what I can say is, yeah, I think everyone should very much stay tuned for the second epoch. We're going to be unveiling quite a bit in terms of our plans moving forward. And then we will also be raising the cap fairly soon. So I'll definitely share more on that as soon as I can. Within our Discord and on Twitter.
Well, I'm on both. I'm following. I'll be paying close attention. Luke, any last words or any final thoughts before we wrap this up?
Um, I just want to say, thank you so much for having me on. And then I think, yeah, I think final thoughts is, I think I also just want to thanks again to everyone that laid the foundation for us being able to build today, right? So Casey, Domo, Danny, all the folks, with ordinals, with inscriptions, with runes, and certainly the Babylon team for really building the foundation for us. So very excited to be here, and I think in many ways it's very refreshing to be building, kind of this all these cool like infrastructure in Bitcoin.
All right. Well, Luke, thank you so much for coming on Bitcoin Season 2. I'll take you down and close this out. Thanks for listening to Bitcoin Season 2. Make sure to like and subscribe. Follow the Twitter account BTCSZN2. Subscribe to the YouTube channel and make sure to click the notifications so you get notified when we drop a video. You can listen to Bitcoin Season 2 on all streaming platforms: Spotify, Apple, RSS. Make sure to check out other Blockspace Media content, such as the Gwart Show, my personal favorite, the Mining Pod for all things mining, the Bitcoin Stock Show, and check out our newsletter. We consistently deliver interesting insights and alpha and commentary through that. Otherwise, thank you so much for listening to Bitcoin Season 2. See you all next week.